Hey there, everybody. Thomas with Basecamp Trading here. It is Monday, October 19th, and we're going to take a look here at the Nasdaq, and I'm going to talk a little bit about why I am currently hedged and what I've done to hedge, and what our outlook is for these markets or the indices over the next couple of weeks going into the U.S. elections. So first off, before we get started though, if you're on YouTube, make sure you hit that like button and subscribe if you haven't already done so. And with that being said, let's go ahead and dive in here. So Nasdaq, what we're looking at is Nasdaq futures NQ on a weekly basis. So one of the big things we've been watching, now if you've been in the trading room with me, you know we expected the rally. We expect the S&P to go up and hit 3,500. It obviously went past that a little bit, but that was our target coming off of the long bottoming tails 4 weeks ago. Now, what we're looking at is this bearish divergence. So a bearish divergence occurs when we go just about equally high prices up here, but we have significantly lower high indicator line and lower high histograms on the NQ momentum. Now, the other thing that we're looking at is this long topping tail from last week. So that shows an unwillingness to keep rallying. Now, keep in mind, technically this doesn't trigger until we can break last week's low. Once we get through last week's low, we'll be looking for this to sell off over the next couple of weeks going into the U.S. elections, and then it's kind of up in the air from there. We'll see who wins and how the markets react. Now, the ways I have hedged, I've decreased position sizes in most of my long-term holds and most of the indices out there. Cut things like Amazon. We cut Amazon when it had that big spike last week. Took off all of our Amazon position. Cut other long-term holds like Apple, Facebook, Google, etc. And now what I've also done is I've purchased call options in SPXU, SQQQ, VIX, and VXX. So we're looking for volatility to increase, which it should going into the election. And we're looking for the indices to come down. And if they do sell off, our SPXU and SQQQ calls will start making money as those are inverse ETFs. So again, we've decreased position sizing and added hedges based on volatility and inverse correlations to the indices. Now, that's not to say that we are not net long, because we're not net short. We're not net short the market right now, but we are still net long. We're just hedged net long, and we've decreased our leverage. So we're not as bullish as we were, taking off about half of what we had originally. So long term, next several weeks, looking for the indices to pull back off the divergence, looking for our hedges to make money. Long-term positions will probably lose money. And then we'll see what happens after the election. Now, assuming that the Nasdaq does pull back down here like this, what that will then do is put in a lower pivot high on our weeklies. And what we'll be watching for is, assuming we do get that lower pivot high, we'll draw a trend line going just like this across these weekly highs and look for this to, if it breaks the trend line, resume the uptrend. And if it does not break the trend line, we'll look for it to change trend and go lower high, break to a lower low, and trend down. So that's what we're watching for right now. Again, still net long, but nowhere near as bullish as we were. And we have hedges in place now. As of last week, they're already making some money. The hedges are. And we'll see how things play out over the next couple of weeks going into the elections. Watch how the market digests the election news. So that's it for today, everybody. I'll see you in the next one. And until next time, happy trading, everyone.